Hello class, this is Brian from financialtrainingschool.com and welcome to BO202 Part 3 Support Resistance Level Breakouts. So, although the content presented in this lesson is somewhat independent, it's still continuing onwards from the end of BO202 Part 2 Support Resistance Level Bounces. In addition, even though support resistance levels are by far the most universally used price action technique, they aren't the best tool for trending markets, but they do still have their moments, which is why I specifically made GT202 Part 2 Price Action Breakdown prior to making this video to clarify this issue. So these two videos, I hope you watch them prior to watching this lesson in order to fully grasp the concept of support resistance breakouts. Lastly, as a co-requisite, I suggest you watch GT203 pattern formations, as it will come in handy for some of the chart examples. So this isn't a requirement. You can watch this either before or after. It doesn't really matter, but it's just gonna help because basically pattern formations will come out, and pattern formations is a part of price action factors, and knowing the pattern formations, that might help you gauge what the outcome of certain price action levels will result. So it's not a requirement because this lesson isn't focused on pattern formations explicitly. That will be saved for BO205, which will be the official lesson on pattern formations. So having said that, I won't actually explicitly state the patterns when we go through the chart examples, because basically BO202 is purely based on support resistance levels. So I'm not technically allowed to draw trend lines. I'm only allowed to draw support and resistance levels to outline the techniques. So I can't actually use the pattern formations explicitly, so I won't use that. But if you do know them, it will help you along the way if you can recognize them. So the question comes is, what are breakouts? So as the name implies, this is when price is breaking outside of the range. Thus, as mentioned in part 2, this is the transition between a ranging market to a trending market. So by convention, when you're speaking to someone, you should also indicate what direction the price is breaking out in. So e.g., you should say something like price is breaking out upwards or downwards. So depending on what markets it is, that's how you talk to somebody. You can't simply say price is breaking out, because that's kind of ambiguous and vague, because they're going to be wondering, is it going up or down or what's happening? You need to tell them the details. So you could also attach something like it just broke the resistance, which means it's going upwards, or it just broke the support, which means it's going downwards, so that the person that you're talking to, or the people that you're talking to, they understand what direction it's heading. Lastly, before we move on, I just want to say that the defining features of a trending market will be fully detailed later on in BO203 trend lines and BO204 determination of market type. And yes, basically, as I said in the beginning of the slide, this is the transition between ranging and trending markets. But I don't want to dive into the specifics here because they pertain more to trend lines rather than SR levels, and thus they should be reserved for the lesson specifically made for trending markets. So just wait until BO203 and BO204, which will come out towards the middle of next week, so either Tuesday or Wednesday. And I say next Tuesday to Wednesday because this weekend I need to make a couple videos on broker promotions, and also I need to make videos for students taking economics with me, which will be uploaded on Monday. And Monday is when the tutorials are, so that day I'm teaching at school for 6 hours straight, so my voice is obviously going to be drained. So when I come home, I can't make a video. So the earliest BO203 part 1 or I'm probably going to break it up into parts again. So part 1 of BO203 will probably come out on Tuesday, and then part 2 will come out on Wednesday, and then BO204 will come out towards the end of the week. So by the end of next week, basically, I will have finished BO202, 203, and 204, which is basically the 3 techniques for price actions and how to use them. So as a reminder from part 1 and part 2, once broken, the roles of support and resistance levels are reversed. So e.g., if a previous support level is broken, price moves down. As price moves back up to meet the old support, it should act as resistance. Hence, the roles of the levels are reversed. Now, as for price breaking out of a range, this can happen for various reasons. As we saw in part 2, news can cause a price spike, which happened around 8:30 when that news about the I forget what was coming. I think it's core retail sales or something came out around 8:30, and that caused the news spikes. Then during the Asian session, we saw some random price spikes as well, and these price spikes are usually caused by a lack of volume. Thus, any larger than normal order for Forex will cause a spike in the price, and that's what usually happens. Alternatively, a lack in volume and hence a lack of orders over time can also cause SR levels to become blurred or ignored. Because if there's a lack of traders online, they have a lack of orders in place, there's no one really to defend the support and resistance levels, so it doesn't cause that bounce effect as you saw previously, because as soon as it reaches the high probability, it should bounce if there are people trading it. But if there's nobody trading it, then it's not going to bounce. It's as simple as that. So basically, the latter results in a extended price consolidation, i.e. a flat market, rather than a large price spike, which is a volatile market. So the third reason would be the real breakouts, and the real breakouts are usually caused by natural price action via pattern formations or candlesticks or whatever natural things that happens without the news or whatever happening. So for trade entries, just like before, there are several different places for you to enter, and each has their own respective probability levels. As soon as support resistance level is coming up and it's about to be tested, two things should be on your mind. Is price going to bounce like it did in part 2, or is it going to break, which is what part 3 is all about? So the former was already covered in part 2. The latter, which is this video, requires some kind of luck or skill on your part to gauge the outcome. So there are three things. So the first is a low probability trade. Low probability trades would be to enter at the support resistance level in anticipation of price breaking the SR level, like in patterns. So if you have, say, an ascending triangle or a descending triangle or whatever butterfly formation or double top or whatever you want to use, if you know what the pattern is going to look like and you anticipate it's going to go in a certain way, then you might trade ahead of that. But that's anticipation, and anticipation is not the best way to trade, because what we're trying to do is we're trying to react to the market rather than predict what's going to happen, which is why this is a low probability. Then medium probability would be to trade via a confirmation close above the resistance or below the support level, and the trade entry would be on the open of the next candle. So this is medium probability because this is 50-50, because depending on how far the close is relative to the entire initial breakout, this could be chasing. So the third method, which is the best one, the high probability trade, is to avoid the first and second method and wait for a pullback. And pullback entries are basically placed at the previous broken support resistance levels that have the roles reversed. And the reason why you would prefer this one is because it's better to miss a trade opportunity, hence patience, than to take a low probability trade. So before I move on to the chart examples, I just want to mention something. I will continue to provide real-time thought process for the chart examples, since it seemed you all enjoyed that in part 2, because you get to see what I think about as I go through trading. So in part 2, I used the USD CAD because I knew price was ranging and thus would be a suitable candidate for the lesson. You'll recall that there were notable price and news spikes in the lesson, and those spikes aren't really suitable for this lesson, which is why I will be using another pair. And the differences between spikes and breakouts will be explained in BO203 trend lines, because that's the defining characteristics that I have to reserve for that lesson. So for the purposes of simplicity and clear examples, I will be using the Euro USD since it works better due to having more breakouts and price movements. And also something to note, in case people are questioning the accuracy of my chart examples, yes, I do know what price is going to do or what type of market it is, which is why I picked the specific pair for this specific chart examples, but I don't remember exactly when and where it's going to occur. So since I'm doing this in real time, quote unquote, just to show the levels and what it's going to go through the thought process of each level as it comes up, and then we move through the chart slowly. So I don't remember exactly when the breakout is going to happen. I know that it does happen eventually, but not exactly when. So we're probably going to go through about at least 12 hours of chart time, or maybe even 24 hours of chart time. And then I'm not sure how long this video is going to be, but so far there's about 10 minutes of PowerPoint. So I'm guessing there's going to be maybe between 20 to 50 minutes of chart examples, so sit tight. So I will be using free stock charts again, and this is the Euro USD 5-minute chart. We are starting on, this is Wednesday around noon. So Wednesday afternoon, Euro USD 5-minute chart. Same thing, candlesticks as before. Basically starting out, since we're still in the mindset of BO202, we can't draw trend lines yet. So if you do see a pattern, just keep that in mind as you're going along to see that what the pattern is forming and what's going to happen eventually. If you're good enough to spot it without the trend lines, then kudos to you. But for the newbies, wait until BO205 before we explicitly do that. So starting off the bat, what I want to draw is start drawing the support resistance levels. So top levels will be red again for resistance. So this is the high starting, right? This is just a session. We don't know exactly where the market is coming to be at this point in time, but as soon as you log in, this is what the mindset that you have. You open the chart, you see the 5-minute chart in front of you, and then you start drawing right off the bat. In BO204, 205, 206, and later on, basically, we're going to develop the mindset of how do you fully prepare yourself when you first log in. But for now, this is what we have to work with. So you have resistance levels up there and support levels over here. Right now the chart is really zoomed in. I will zoom out later on to display at least 5 hours. Right now it's only displaying about 3 hours, because later in the next couple hours there will be a spike, and I want to go through the thought process of that spike. Also, we have mid-level levels here in the middle for previous support and resistance. So we're going to use blue and orange like we did last time. And up here we have resistance for these candles here. I won't mention the pattern, but you guys should be noticing that this resembles something. Wink wink. So let's just move this forwards and we'll zoom out shortly. So moving forwards, we want to see how price reacts. You can see that price, so we're not really trading support resistance bounces, but if you wanted to, drawing up to this point, logging in, this is the 35-minute mark, and this is still the US session, so this is 2:35. The next expiry would be 2:45. If you wanted to, you could have traded a touch of this resistance level. Since this is after the 30-minute expiry, you could enter right here for a put, and the next put would expire in the next 2 bars, and by 2:45 you would have won this 15-minute trade right there, assuming that it's still offered at that time, which it should be. I think most brokers should still have 15-minute expiries, since this is towards the end of US session, but it should still have 15-minute. It shouldn't transition to 30-minute expiries until after 4 p.m. or something. So anyways, that's one trade that you win. So moving forwards, let's see what happens. This one is now the 55-minute mark, which is kind of late, but if you wanted to, again, you could trade another put right here on the touch, right? Because this is touching a resistance level. But if you notice that the pattern, right, see, this is going upwards, and this is a resistance level. Wink wink. If you guys know what I'm talking about, then you can just shout it out to yourself and pat yourself on the back for knowing it. So this is touching resistance. At this point, it's kind of risky to take the trade if you know the pattern that I'm talking about. But if you don't know the pattern that I'm talking about, then we place another put there. So let's just redraw the arrows just to display what we have won. So this one was an entry, so that one won. Let's say we trade another one, so say this one, on the assumption that we don't know the pattern. Let's see what happens. Oh no, it broke up. Which is why it's risky, because this is the pattern. So this is a pattern. I won't name it, but it broke resistance, so this one ends up losing, which is why it's a low risk to start with if you know what the pattern is. And this is what I was saying about low probability and basically the first, second scenario of trading breakouts. This is resistance. It broke, but you should also note that there's a higher resistance up here in the 2290, and this is 2284, so it's only about 6 pips higher that you have another level above. So which is why it's kind of risky to trade the breakout at this point, but given what's been forming in the past hour, this would be a pretty decent breakout trade. since this is expiring at the hour, you can't really trade the low probability. You can't anticipate that this is going to happen because you don't, as I suggested last time, you don't trade past the current expiry. So you would skip the first method, which is the low probability. The second method would be, since this broke above and it closed above your resistance level, we would enter on the open of the next candle. So let's see what happens on the next candle. Next candle, it goes up. So based on the second probability, the second method, which is medium probability, so 50-50, at this point it could be just an overextension of the resistance. As we saw in part 2, it could simply just go back down and you would lose, which is why it's 50-50. But the other flip side is you could win. So this is going up, so this is moving in the right direction. We'll see what happens in the next 10 minutes. And you'll notice that it broke this resistance as well. So if you want to play the final level, because this is a previous resistance, so if it broke that, this is confirmation. If you want to hedge yourself or if you want to be aggressive and gamble, you could enter a second trade, but I would suggest you avoid that and you just have that one trade per trade expiry. Since in part 2, in the trading conditions, we mentioned that we're only risking a fixed amount per trading window. So basically only one trade per 15 minutes in this case. So we're not moving past that. So we already have a trade. We're going to sit tight, see what happens in the next 10 minutes. So let's move forwards 2 bars. That one moves and this one moves. So this is now the 15-minute mark. This one wins, right? This one wins. This one closes up here and it closes above this level. Now, at this point, you either want to keep watching to see how far up, because it goes up, it breaks your resistance level, but then it comes immediately back down, but not back down to this level. So if you wanted to trade, say, your the third method, which is a pullback would have been typical to go all the way back down to this orange level. So this is the 844 level. This only went down to the 862 level. So if you were impatient, you could have entered there to expire here and you would have won. But that's kind of low risk because it's 2 pips away. It could have, this green candle could have easily closed down here and it could have been a red, and then it pulled back, and then the next expiry goes up. So it's kind of hard. You just have to gauge it yourself, and this is why there's a luck factor, because the pullback could either be a pullback, a real pullback like this is now, or it could just be a fake move down, or it could be a fake move up, so that it's kind of like a bull trap or bear trap, which will be talked about in the 300 series. So anyways, let's just move forward. So we don't enter yet, so because this is this current bar. So the next bar, we are possibly looking for an entry, but it looks kind of weird because this goes up, this pulls back, this immediately goes back up. Question is, can it break this level further, or is it going to go back down? So, and also note, at this point it is 3:15. So this is now, if you're trading stocks, this is power hour. This is what the stock traders usually call power hour. When I was into stocks, this is what we called it. The last hour of the U.S. market is basically power hour, because the last hour before market close is usually when everybody gets their trades in. So all the intraday traders close their trades, or the weekend traders, since it could be, this is Thursday, this is Wednesday, so it's not a problem. But on weekends, on like Fridays, power hour is usually really wild because people are exiting their positions for the weekend. But anyways, let's just move forward, see what happens moving forwards. Next bar goes up. So if you wanted to, this is your, I guess, your pullback, right? Because this was your previous red resistance. This one goes up, this one goes down, this one goes back up, and by this point you're not entering. But here it retraces back down to your support level, because it was previously resistance. Now it broke here, and this is pulled back directly, exactly to your old resistance, which is now your support level. So this is the third method, which is the high probability of a pullback. So let's say we place the trade there. So like I mentioned before, I don't know what's going to happen in the future. I don't know. It could keep going up or keep going down, whatever. We're trading this as we go along, and we're kind of aggressive considering that this is near the end of the day anyways. So moving forward, let's just see what happens. It goes back down to 25. If the next bar doesn't move back up, then we lost this trade, and it closes down. So this is a loss. So what this means for us moving forwards is that this is a tricky area, because now that you've been through part 2, you know support resistance levels. If you were to continue drawing lines up here, this is the next level of interest. This one, it held here, but it didn't hold here, so it's not really a strong level anymore. We'll see what happens. It's starting to get choppy, and this is the power hour after all. So let's see what happens moving forwards. I'm just going to zoom this like this so that we move forwards. Moving forwards, one more bar. So we lost this one, so this was bad timing. This one, at the 35-minute mark, it goes up. So we just got bad timing in that case. So we lost that trade by 1.5 pips. So, I mean, whatever, right? Whatever happens, you just move forwards. At this point, we are 2 out of 4, so it's okay. And you notice there's no such thing as a touch or confirmation trader. I'm not using those terminologies anymore. Right now, we're using first, second, and third method for low, medium, and high probability. Or basically, if you want names, the first one would be anticipation, the second one would be reaction, and the third one would be pullback. Reaction and pullback are the best ways to trade, but reaction is kind of bad because it's 50-50, so it depends. So moving forwards, basically at this point, 2 out of 4, it's power hour. We just want to stop trading until 4 o'clock. So let's just move forwards until 4 o'clock. Hey, look at that. If you were, so this is just a if, okay, this is in hindsight. If you wanted to be a counter trend trader, right, because see, look, this is a breakout, right, so this is a pattern, it breaks out upwards, which looks weak, and if you were noticing that it looked weak, or this could just be consolidation, or whatever happens, if you wanted to be a counter trend trader, you could trade a put on this level, which is the absolute high, and you might win. But we don't know exactly what the next bar is going to happen. But based on this drop, it looks like it's going to continue dropping. And also this isn't covered in the candlesticks videos yet. I don't have one yet. But this is basically an engulfing candle, where the body of this red bar engulfs this green, and also this red engulfs that green. So these engulfing patterns are usually overwhelming reversal changes. I guess you can think of it that way. So moving forwards to see what the 45-minute mark brings, it still closes down. If you were to chase this, you would have lost. But if you place a trade up here, you would have won. But anyways, we don't know that, right? We can't. I'm gonna try to avoid moving forwards too much, so that we don't accidentally cheat, right? So we're just gonna move forwards to 4 p.m. So this is now the 4 p.m. mark. And basically this one now becomes orange, redrawing the levels, and this one becomes red. So moving forwards, we have this is the 4 p.m. So at this point, U.S. markets are closed based on the trading conditions in part 2. Everything from this point onwards for the next, I guess, 16 hours. So until 8 a.m. will be 30-minute expiry, since we're now in Asian session, and we're doing 15-minute lockouts. So we can't enter past the 15-minute mark and can't enter past the 45-minute mark. So moving forward, let's see what happens. Moving. We're waiting because this is no man's land, technically, if you're trading bounces. But also, this is kind of ranging now because you're looking, is it going to bounce down to this level? Is it going to break this level? What's going to happen? It's kind of in the middle. If you were to continue drawing, there is also another mini pattern forming right here. If you think about it, this one is, say, your support level, and these are going lower. So this could be minor. If it breaks below, if it closes below the 7-9 level, that's a potential reason to enter if we're trading trends, basically. See, because in the bounces in the ranging markets in part 2, we wouldn't be trading in the middle here because it can go up or down. We don't know. But in the trending, if you put a trend inside here with the patterns and the breakouts, you could enter a mid-level here in the middle, since if it breaks below this, which is actually the midpoint if you look at it, it could be a nice trade going downwards. So let's see what happens. Moving. Oh, it broke. So if you want to do anticipation, which is kind of hard in this case, you wouldn't enter because of anticipation. But if you entered for the second one, The second one is reaction. This is the 10-minute mark. If you enter, say, a put at this level, that is kind of 50-50 because it already moved. If you think about it, from this level 780 to this level 76, it's already 4 pips. The whole range is only 67 to 96, not 95. So that's what is that? 28 pips. So 4 out of 28 is 1/7 of the range. So it's okay, but right here, considering from 7.6 down to 6.7, it's only 7 pips away from the bottom. So would you really want to place a put in the bottom third of this range? Kind of risky if you think about it. This is why you need to combine your knowledge of part 2 and part 3 now with the breakouts to fully understand if you want to enter the trade or not. So you're going to think about these things moving along. See, that's what the distinction between veteran traders and newbie traders are. Newbie traders are, you think, pretty simplistic. You just think about, is it going up or down? Is it breaking this level, that level? You don't really calculate these things in your minds, but basically for people like me or the pro traders, they process this immediately. They look at it, they're like, okay, look, this is the bottom third of this whole range. In terms of ranging, this is a bad place to enter a put. If you want to trade at this would be like mid-level risk in the trending, so it's kind of bad. So anyways, I just want to stop talking and start moving onwards. Next bar breaks below, but this is a pin bar, right? And this is the 15-minute mark, so we can't really enter past this point anyways. But this is a pin bar, which, or actually not a, yeah, it's a pin bar. This is a hammer, right? The long bottom wick with a small body. So this was covered in the BO100 series. I already have that video up. So this is potentially could reverse, which is why a put would be a bad idea. Well, let's see what happens in the next 3 bars. So this is the 30-minute mark, and it does reverse. So this is why it's kind of bad. If you, on the flip side, we don't actually have any lines drawn here, so we wouldn't enter this. If you were on higher time frame charts, you might have a level here because it bounced over here, and it bounced here, and it bounced here. So these wicks here, 1, 2, 3. So if you wanted to, you could have drawn a level here from before. So I mean, we can't. I'm not going to do it now in hindsight, but if you had a 15-minute chart on or 30-minute chart, maybe you might have a level because these are actually bounces there. But we didn't do that. But this is why I said placing a put here, given in the last third of the range, is kind of low probability. So you would avoid that trade. Using that mindset, basically you just avoid a losing trade, but you don't enter the trade in the opposite direction because you don't know, what if it just goes down? But the probability is against going down. It's more likely to go up, but you don't trade the up for the chance of it might continue going down. So having the thought process is just going through the mindset of avoiding trades. When to take the right trades, the good trades versus the bad trades, or 50-50 trades basically. So that's lost. So now we see what happens. Next bar doesn't really do much. This is in the middle. We can't draw trend lines, but if you wanted to draw levels, I want to. So this level is still good from before. This might, since it broke, this is previously resistance, broke up, kind of support up here, not really though. Broke down, broke up. So this is kind of just choppy in general. If you wanted to, you could move this back down to here or just leave it up there, whatever. But this level here was previously resistance, so maybe in your mind you're thinking, okay, maybe this up here was just a price spike because of power hour. So this whole hour was a price spike. Somebody was exiting their trades, and then now we're back inside the old range, and this could potentially be a new resistance level. So I'm going to go out on a limb, and I'm going to place a put there. In the BO203 trending markets, you'll see why this is actually a better trade, given if you connect here, this one, to connect that one, kind of, you can see that overall it's kind of going downwards, and this is now in the top 1/3 of this range. So now there's a higher probability up here that it's going to go back down than it is to go back up. So let's see what happens. Goes up. No, it's gonna lose. What's going to happen? This is now the 50-minute mark. So we entered at this point 8.4. If this continues going down, we're good. But otherwise, this is the 4.5 level. If you wanted to hedge yourself, which I don't agree on, right here, I don't know, it depends on your risk. You would place either a half trade or maybe a 30% trade and leave your 70% trade up here. But we're going on the assumption that we're trading the full risk that we're willing to risk, so the 2% or 5%, whatever it was. So moving on, we'll see what happens. Is it going to go back down? If it doesn't go down, then we're going to lose. In this case, it closes pretty much near break even, so I'm going to change this to black, so it's break even. So whatever, we're moving onwards. See what happens. So now you can see there's kind of awkward ranges forming. It's kind of, you can see it here, it ranged from in between these two areas, and then here it ranges between up here, and now we're seeing between this green up to this red. So let's just change this back to red to see what happens. This one will be erased soon, but anyways, we're just gonna move forwards. So now at this point I've moved a bit ahead, but it just went right back down, and this one punctured the support level. This is the 10-minute mark. The next bar, okay, if it closes below this level or if it touches down again, I will seriously consider a put. But we still have supports down here, but we need to see if this is broken first. So I would say wait for the next 15 minutes from now, 5:10 to 5:30. If it manages to break below this level, then I will seriously consider a put for the next at the end of the hour, basically expiry. So moving, and it broke. This is the 15-minute mark. So 15-minute mark, it broke. So at this point, basically price action, the way support resistance levels work is if there are people defending the price, then it should bounce right away. It shouldn't give a gap. Like even the gap, you shouldn't give that much leeway. You might give a few pips or so, but at this point it broke the 6.7, it broke the 6.5. What I would like to do, since we're trading breakouts, this is breaking outside of the range, so this is our absolute price, the absolute low, 671. Since it broke below, so if you're doing this in real time, it would go up and down, up and down, up and down. But as soon as it broke the 6.7, so as soon as it got down as low as 6.6 or even 6.5, I would consider a put. So let's say we consider a put at the 6 level, so just below the support line, and we want to see what happens. So this is the 15-minute mark. We're expiring at the 30 mark. Down, down, down to the 30-minute, and we win. So this is a win. So far we are at 3 out of 5. So this is a win, and if you kind of think about it, if you at this point you want to enter again, this is kind of a deep move already. See, we broke support 6.7, and this is now the low was 15 pips below. Pullback went up to 5.8, but anyways, we can't enter that because that's at the this is at the 30-minute mark. So we're moving onwards to the next expiry. So moving one bar, let's see what the next bar is. Next bar is it tries to go down, it tries to go up again, continuing, but this level right here, if we drew a line like that, right, this is what the pullback would be, I guess. Kind of hard because this is not the traditional trend. This is more of a spike, which will be elaborated in the next video, but this is a spike, so it's kind of hard to trade spikes because every entry you trade in a spike looks more like chasing, and I don't like chasing, so I wouldn't enter this personally. But we're just drawing levels. Basically, if you draw levels at each low, this is how you trade the spikes. Technically, you base a line on the low of this red, so that hopefully if it comes back up, it should act as resistance. It doesn't, and then at the low of this red, if it comes back up, the coming back up will be where your trade entry is. So based on this, you would trade an entry right here at the 566 level at the 35-minute mark for the end of the hour, and we'll see what happens. So this is just hypothetical trading. So this is on paper if you want to trade this one. I'm not going to actually enter it on the chart because I'm not sure at this point. So let's just move. Oh, it goes all the way down. Look at that. That would have been a nice hypothetical trade. No, come on. It's so hard to control this. Okay, at this point. So up to there. If you wanted to enter, that would have been a decent entry to. Actually, no, that would have been a great entry to win. But I wouldn't personally do that because this is in the middle of the spike, I guess. Because see, look, this is just continuous one line going down. It's not really a trend. This is more of a spike. This is a one directional move within an hour. So if you're chasing, or if you're trading touch options moving downward, so this is, if you notice at the end of every lesson, I have my recommended broker slide for the 24 options, right? And for trending markets, I mentioned watch BO202 and 203 or 204, right? And basically in trending market, if you want to trade touch options, you would be trading touch down all the way down, and you would win. But for put options, I would avoid this unless you can get a pullback. So a pullback would be up to the 6-7 level, or maybe even the 6-1 level to enter. But I don't like chasing, so I wouldn't enter these. So now moving forwards, it moved a total of from 87 down to 31. So 87 minus 31 is 56 pips in 1 hour. That's how you know it's a spike. So I made a lot of movement, covered a lot of ground in 1 hour. So remember what I said in the beginning of part 2? If the market is trending, it only trends for so long before it starts ranging again. And usually what follows a spike is a range. And this will be covered more in detail in BO204, which is basically the moral. Well, what I just told you is the moral of BO204. So that's a preview of that. Basically, in the BO204 and BO205, 206, 207, that's all about counting candles, gauging how long something lasts, how long is the trend going to last, how long is spikes going to last, how long is the range going to last, etc., etc. Knowing the time limits for a range or a spike or whatever, you know when to expect the change is about to happen. So right now, at this point, after moving this much, I would just avoid trading for about 2 hours. Okay, because if it moved this much, it's going to have to consolidate and it's going to range before the next thing happens. So let's just move forwards about an hour, see what happens. Or up to this point. Up to this point, you can tell that this spike happened. This is now your low, and you also have a high here. So this is your potential range forming. So that if price goes down to here, you'd be tempted to place a call, but it's kind of risky because it already went down this much. What if it's just consolidating to continue moving downwards? Maybe. If you were here, if you place this line here, this is also the tip of that candle right here. This is your resistance. You could have placed a put here in anticipation, but knowing that it ranges after a spike or a trend, you don't really want to risk this, because what if the range stops up here or stops over here? You don't know that. So we would avoid trading here. The next one though, if it touches up here again or touches down here, I would really consider a trade. So let's just move forwards a bit. Moving. That one is the 45-minute mark. 45-minute mark. What I would like to do, I would like to place a put right there, because these are resistance levels now, and this is the range, right? So we want to see what happens. So placing a put there. We're expiring at the end of the hour. Is it going to go down? Is it going to go down? Yes, it goes down. So it does break. So this one, you're kind of, at this point, you're kind of questioning yourself. It broke the resistance. It made a new high up here as well. But here at the end of the hour, it closed below. So we won this trade, but this level isn't really that good. So I'm going to basically move the level down to here like this. And we're going to erase this one since that wasn't really a real level. All of these levels should be fine for now. And basically at this point, so we have 4 out of 6, so we're doing pretty good. This point is 7 p.m. So Australian pre-market is about to open, and Tokyo pre-market should be opening soon as well. So so this is the amount of zooming out I want to do, and at this point we're back to moving forwards with the chart. So moving forwards, next bar gets down to here, but it broke below, which is kind of expected, seeing that this goes down, this consolidation, this could continue going down. At this point, you would be considering, do you want to continue putting, going down, or not? The thought process behind not placing a put here will be covered in, I guess, BO210 to 11 average true range ATR, because a day can only have a certain number of pips movement for average movement range, right? So like in this case, you saw that price was up here at 9.5, and so far in today it already moved down to 2.3, so that's already an 80 pip move. So can price continue moving downwards today? Maybe, maybe not. Most likely not. Like 80 pips is pretty typical movement. 80 to 100 pips is the average per day for the Euro USD, Australian USD. USD CAD is probably something smaller, like 30 to 60 pips, something like that. So knowing that, your expectations is it's not going to go down. So I would avoid placing put just to see what happens. So I'm just going to not trade for the next hour until, or unless it breaks up here or it continues breaking down, and we could reconsider our options. So far we're at the 40-minute mark of this video, so we're probably going to do another 20 minutes of video time before we end off. So moving forwards, see what happens. Does it continue going down or not? What do you guys think? Down or up? I think it's going to start either consolidate some more or continue going up. At this point, I don't think it's going to continue going down, but I'm not going to risk a call because we're in a down market. It might just continue going down. So I would just avoid trading for the next hour. So let's see what happens. Goes down. Oh, what do you know? So we're reconsidering. Oh, look at that. So at this point, it goes down. But this point, this is an engulfing candle. So, question is, this is previously support. It comes back up. This is resistance. But this is also the 20-minute mark. So you can't enter for this trade expiry. But the question is, this is also an engulfing. So maybe it's going to continue going back up. You don't know. But so far, if you count the pip movement, this is 95 up here, 94. And it moved all the way down to the 17 level now. So that is now a total of, so let's see, 95 minus 17 is 8, 78, 60, 78? 78? Yeah, 78 pips. So 80 pips, right? Was that right? Am I counting right? I'm not sure. I don't know. If you have a calculator, you can do it. But at this point, that's a lot of movement. As I said, with the ATR, it's more likely to go up than it is to go down at this point. So it does start reversing, and that's an engulfing candle like I mentioned. But we're avoiding this whole hour just to see what happens. Moving until the end of the hour. So at the end of the hour, we now have a new low down here. We're going to put this as our support level, and we're going to put this as our resistance level. Now, moving a total of 80 pips down today so far, price could now just consolidate, because you have to remember this is now 8 p.m. So this is when Tokyo is actually open, Australian is actually open. So this might be consolidating just like it was the other day. Asian markets tend to be just flat markets, so it might be consolidating. But you might also have price spikes, so you need to take that into account. So are you in a ranging market mindset or a trending market mindset, etc., etc.? So let's just move forward. We're not going to do anything for the next hour again. We're just going to watch, does price break out or not? And this is actually another pattern. This is a stick here, and this is a rectangle. What does a stick and a rectangle give you? Moving. It's still rectangle. Consolidating. If it goes down to this level, the very low here, 175 around here, I will seriously consider a call if it goes down, all the way down there. This is about 6 pips away, so we'll wait for it. And this is also the 45-minute mark, so this is already past lockout time. We can't enter unless you enter on this bar, which we're not going to, because this would be your low probability. support because of these bounces over here. So I wouldn't trade them. So let's just keep moving. If by the end of the hour it does get down there again, I will seriously consider a call. So this is now the end of the hour. It doesn't get there. See if the next bar, what happens. So the next bar, it does happen to get down there. So this one, I kind of scrolled too far ahead. But I already told you this in the last 2 minutes that I was placing a call here. So I'm going to place a call. And I'm going to actually move this this chart up a little bit just to have more room. So I'm going to place a call right there at the green. And we'll see what happens. Moving forward. So this is the 5-minute mark. We're going to expire at the end of the hour. At the 30-minute mark. So we're going to scroll ahead for 5 bars. See what happens. Don't go down. Don't go down. Is it going to go down? No, it doesn't go down. So it actually spikes back up. And this is the 30-minute mark. So we win this one. So that's pretty good. And at this point, you can tell that there's an established range. So there's a range between this level up down to this level. So, and knowing the ATR of 80 pips, this going down, if it comes back down to here again, I will seriously place another call because the call is more high probability than is down. But you also have to recognize that this is a potential pattern formation. But give all things constant, I would prefer a call over a put at this point. So if it does break out upside to this range and breaking this resistance, that will also warrant a possible call above here. So see here, if you want to draw secondary levels or just move this up to the previous high up there, this broke that support, the resistance. So this just shows that this is a possible weak resistance. So this one broke it, came back and closed below. If the next bar closes above, then we will enter based on the second method. Otherwise, if it closes above here and it pulls back, we could enter on a third method. But I would like to see it close above, and we'll enter on that one if it's a small close above. Or maybe if it just closes above again, just to see what if it breaks this high 51.5, then I will consider a call. Okay, so if it breaks above 515 in the next candle, if it breaks above 515, that will be a call. Or if it closes above, or if it doesn't break that high but it closes above the 474 level, I will consider a call as well. So those are the two possible entries that I'm saying ahead of time. I haven't scrolled ahead. I don't have another monitor displaying this, FYI. But this is the only chart I'm looking at. If it doesn't go with one of those two methods and go straight down, then I also have a call entry down there. So we'll see what happens. We can enter up to the next 3 bars. So let's see if we get there. So the next one, it actually breaks above. So the entry I told you guys was I would enter at the 515 level. If it broke the previous high, since this one already punctured the resistance level, that shows that the resistance level is weak. Like Asian session, like I mentioned in the PowerPoint slides, there is nobody defending this resistance level. So it means there's a chance of weakness, so it could potentially just break out. So since it broke the 515 level, we place an enter, a call. And I told you guys that ahead of time, so I'm not cheating. All right, so the 515 level, that's our entry. And we're going for the end of the hour, see what happens. Going forwards. Oh, look, it reversed. If you wanted to hedge, or if you just wanted to gamble, I guess, or for sake of examples, this is where the pullback would be. So we entered at 515, right? So 515 relative to this resistance level is only 4 pips off. 4 pips is decent compared to the whole 80 range, the 80 pip range for the whole day, and it's pretty good compared to this range of 18 to 48. So this is 30 pips here. So 4 pips inside here, it represents 1/7. 4 pips in the whole daily range is only 1/20th. So that's 5%. So overall, this is pretty decent entry. But if you were waiting for the third method for confirmation pullback, or just pullback, it's not confirmation trading, that's pullback method, you would enter in the 475 entry. So we'll just keep that in mind for the 2 different traders, depending on which method you want to trade. So those are the 2 possible entries for whichever one you are falling under. We're going for the end of the hour expiry, seeing if it goes up or not. Let's see what happens. Does it go back down? What do you guys think? So let's just scroll for. It's so hard to scroll forwards by 1 bar. It closes below, so we lose this trade. So this is the loss. If you were waiting for confirmation, you would have lost as well, because confirmation would have been right there like that. You would have lost regardless. So unless you got in here at the open of this bar, which is at the end of that, the only good entry would have been below here, but otherwise we lost, so whatever. So now we have to reconsider, see what happens. Is this a repeat scenario of what happened up here? Remember here, this broke above. Technically we wanted to continue going up, but it pulled back, didn't let us do it. Is it going to continue the same thing here? And I want to be careful not to scroll too far ahead. Would have been nicer if free stock charts had a little arrow just to scroll instead of doing this. So we're at this point. So since we lost that, looking for trade entries again, I would consider calling down here, and also how this level holds up. This was previously resistance. It may act as a support now, a secondary support in addition to this one. So this one should have been a blue, right? Should have acted as support here, but didn't. This one, previously resistance, may act as support again moving in the future. We'll see what happens in the next bar. If the next bar punctures this line, then we'll seriously consider. Okay, regardless, I'm not entering in the next bar. So next bar is no entry. But if the next bar closes above here and it doesn't puncture this, then I'll consider it an entry. Or if it breaks this, then it's a void entry. So next bar, what happens? It goes back up. So fancy that. This is support, but we don't enter, right? I told you guys I'm not entering in the next bar. At this point, what I want to do is we want to see if these previously broken supports, are they going to act as resistance? If so, what happens? Also, so we're going to change these to orange. Change everything above to orange, actually. Just see what happens. And then at this point, we want to change these to, we'll leave that there like that, and we'll just move forwards. So at this point, I don't really want to do anything until we get to these levels. If it breaks these levels, so this is our previous low, right? This is the absolute low. So 6-7 is our absolute low, and this recovered a bit up to, oh damn, I scrolled too far ahead. So we're up to this point. So if it, at this point, is it going to become resistance later on or not? I kind of scrolled too far ahead, but believe it or not, I don't actually remember what happened there. You guys might though. If you guys pause the video, you guys can actually see it. I'm not gonna scroll ahead again though. If it goes up there, I will consider puts in this area because this was a previous support level. So these three lines here are all supports. This one I'm gonna remove that one. That one seems kind of pointless. But so far we have this, right? So I'm just scrolling out. This is support. So this is high probability support before, or medium probability and low probability. These are high probabilities resistance up there. We have high probability supports down here. These are secondary middle supports, right? So we want to see if these hold. So this area is interesting area. See what happens. Otherwise, if it goes back down to here, the 428 level, I will maybe consider a call as well. So moving forwards, what happens? Goes down and it goes really close. Doesn't touch our level though. But if you were impatient, you could enter right there. I'm gonna wait. We'll wait for 428. Moving. So at this point, this is the 15-minute mark. I'm gonna zoom back in slightly just to show you guys. So 15-minute mark, we can't actually enter until past the 30-minute mark now. So I'm just gonna scroll ahead 2, 3, 4. So 30-minute mark. Now it still hasn't gone back down. This is kind of resembling the same pattern we saw before. These lows here, you can draw a line like that, and then you can draw another line up here. So let's just move, let's draw a level up there like this, like that. So if it breaks above that level, that would be interesting, but we have this resistance level here for a possible reversal, so it's kind of low probability if you were trading here. And I just moved the line by accident, so I just want to move this back in place. So moving forwards, it's so hard to move forwards slowly. So oh wait, no, hold on, we're past that point. Moving. So is it going to break above this level is the question. If it doesn't, then if it goes back down to here, I would consider a call at the 427 level, and definitely will consider a call in the 1718 level, basically down here. Moving forwards, doesn't get down there. Doesn't get down there. Still doesn't get down there. This is now the 45-minute mark, so we have no entry for this hour either. Moving. Look at that. It broke above our resistance level at the end of the hour. So now the high of this one was 685, which is up here, which means it punctured this old resistance, this old support, which is now resistance, which has just been punctured. So the question is, are we going to enter? What's going to happen now? So this got rejected slightly for a few pips. If it closes above, then I will consider a call. But even at this point, if you're trading the second method of a confirmation close above your resistance, then I will consider a call. If you want to be really picky, the level is actually right here, so it hasn't actually closed above yet. Or wait, hold on, let me my mouse isn't cooperating right now. Just want to make it perfect. Let's just zoom in. I just want to make it sure that is. So that is right there. So it's exactly at the level. So it hasn't closed above yet. It's still at the level. So if depending on if you have this line drawn or if that line on drawn, then that would determine your entry or not. So next one, I would be careful. Let's just move forwards. It closed above. So now this is also a doji in combination with this. It hasn't closed above that one yet. So what I would do at this point, I would just wait. And something I forgot to mention is we forgot to check the actual news. So I don't actually know when the news came out for Wednesday night. So let's just check the news now. Let's see. Wednesday we have no news until 9:30 for the Australian data. And then Thursday morning we don't have really anything to worry about until 4:30, 8:30, 10 o'clock. And we're probably going to stop trading at around this point because this video is really long at this point. We're already at the hour mark. So we're going to do another 10 to 20 minutes and then we'll be done. So at this point I want to watch it. I wouldn't enter because this is a doji for a potential reversal. But the pattern says it goes up, if you know the pattern. So now next bar we have a potential reversal now. If the next bar can manage to go down a little bit, or doesn't go up, or maybe it goes up to here. Well, actually, you know what? All things considered, this one is still kind of in line with the pattern. If you connect the lows here, I don't want to draw a trend line, but if you visually see a trend line here and it connects somewhere around here, this is kind of low probability to call or put, so I wouldn't bother. So let's just no trade for this 30 minutes. So I'm just gonna go for the next 3 bars, see what happens. This is actually past. This is the 35-minute mark. But at this point, if you were to enter at this bar right there and you close here, we would basically be break even, and this would be a black arrow, 1 pip. So I wouldn't even bother with that. If you waited for the next bar, if you waited for a pullback, which is what I wanted to say, a pullback up to around here, I would consider a put. But a pullback up to is the 566 if you got the very high there, and it closed at 5.7, that would still be a close trade. So that would still be break even. So regardless of how you look at it, this is a break even trade. The only good entry would have been up here in your anticipation, which is your low probability. So this is resistance levels which didn't really break, and support levels that became resistance that didn't break, in combination with dojis. Dojis is a sign of reversal, but you're anticipating, you're not reacting. At this point you would react, but this is a bad reaction considering you have the pattern here. So there's a lot of things to think about, and the more complicated you make this, the more things you add to your arsenal. the more things that you'll be thinking about. And basically, when you're trading this, you should try to keep it as simple as possible. Get into the mindsets and trade your mindset. Don't make it too complicated. Like right now, I'm just outlining every possible thing that you could possibly be thinking about. So we're not going to trade for the end of this hour either. So let's just get straight to the end of the hour. So the end of the hour, you see that it broke up, but this is kind of already broke the, I don't know, I guess it's okay. But see, this broke up, and then their previously supports are just pushed it right back down. At this point, ideally what you would have liked for to happen is this doji, since it closed above the resistance, you would have liked the next bar to go up. Didn't happen. First rejection down, and it's a big rejection as well. This one, it closes above. Next one is green, but consequently it goes back down, and I want to zoom out. I just misplaced that line. So now I want to move forwards. Don't want to do anything yet. It's kind of tricky. This is a tricky area. So I would just avoid trading with the hour. Let's just scroll ahead. Scrolling. Yeah, I think at this point is when it got really boring. This is a nice trend though. You can see if you connect the lows and you connect to the highs here, you can see a possible trend for entries, but that will be for the next episode. So in the next episode, we'll go back to this chart. Or actually, no, I can't go back to this chart, but by the time I make that episode, the chart on free stock charts will be gone, so I can't actually do that. But you'll notice when we do trending markets, and you'll see why the trend lines are better for trending markets than support resistance lines. Trend lines will give more trade entries for trending markets, because if you connected the lows here, you could have been trading 1, 2, 3, 4, maybe 5 trades. You could be trading 1, 2, 3 puts there. You could be trading at least 5 to 10 puts, 5 to 10 trades in this area right here, but which place only one trade with support resistance. So depending on how you're trading it, you could be having several various different entries. So yes, anyways, moving forwards, I don't, believe it or not, my memory is quite short term. I don't remember what I said around here. Why didn't we place a trade here? This zooming out, this actually looks like these wicks here would have been proved for nice put entries. Well, I guess considering the pattern, that's why I think we didn't place the trades there. Anyways, right now I want to zoom out or keep going to, we're just going to skip ahead to until we get out of these range. So until we break this level or until we break that level, I'm just going to get ahead of this. And I think in the US session, we actually do break out of this. Or actually, there we go. There's the first breakout. Is there a way to go down? So scrolling down here, we have our previously resistance up there, but so here we're tempted to place breakout trade. Actually, wait, hold on. So I actually saw too much by this bar, but I don't know what's going to happen in the next 3 bars. We don't know that, but based on this level being broken, see, the thing with support resistance levels, you notice we have zones here, we have zones up there, when we have zones in the middle here. In the middle you have no lines. That means it's just empty space, and you can see by this green bar it just goes up, right? And that's the whole point of empty space. It just goes up until the next level. So based on our second method, I would place a call at the open of this one, because this one, it broke the previous support, it closed above here. I would place a call there, and this is kind of cheating because we already saw this bar that it went up. I didn't say this I didn't say this going ahead of time, but I don't know what the next 3 bars are. The next 3 bars could be down for all I know. I don't know, but I would place a call there, and we'll see what happens. So moving forwards, is it going up? It's still above our entry, still above, and we win. So if you were to enter there after confirmation, this is why I said confirmation trade is kind of bad. If this bar, this big bar was your confirmation, you would be entering up here, and that would be very hard because you would have already moved 8 pips, and that would be a bad entry. Versus if you had a lower confirmation over here, entering, you would win. So we won that trade, right? And now moving forwards, we're looking for puts up here, and looking for calls down there, and maybe calls over here as well. This might be considered now a green line. So we'll see what happens moving forwards. This is now the 4 a.m. mark. So wait, no, hold on. This is not the 4 a.m. mark. This is the p.m. mark. Wait, am I going crazy? Wow, I fail at life. Well, I'm not gonna redo this video, but basically I just messed up. This is midnight. This is a.m. This is not p.m. What the hell was going through my mind an hour ago? I'm not gonna remake this video, but at this point I need to modify a few trades because you can't because this is Asian session, so you can't actually enter. Wow, this is a big mess up. I'm not going to redo this though, but the mindset on all the trades is still there, but some of the news is going to be affected. So this is Wednesday morning, so wow, this changes a lot of things. So this is why we had movement around 4:30 a.m. to 8:30 a.m. This is why we had this movement here. This moves up and then this goes down. Wow, that would have changed a lot of things. So this is what happens when you look at the wrong time. So I need to ignore every 15-minute trade, so we can't trade certain things like this one. This trade is no longer here, so this one enters for the okay, this is messed up now. So this one will enter for the end of the hour, which will actually become a loss. So that one moves to there. This one would call, which would win, and then this one is past lockout, so you can't actually enter that trade, so that would be void. This one, did we enter? Yeah, we entered here. Well, why did we enter here? Oh yeah, so this was previously resistance here, so maybe it was resistance here again. It ends up break even, so that's break even, that's fine. Moving forwards, this one is good, but this is also news. This is why that happened. I really messed up. This would have changed a lot of things. Moving forwards. This one, 645, would still be a win. Moving. Then the U.S. session opens, and we could actually be trading 15-minute expiries. So I'm not going to redo this video. So you would apply a different mindset. So with 15-minute expiries, we could have entered a few more trades here. So we could have entered like a few more other trades. So now this one, 15 minutes, it goes. So we entered at that bar. This one closes above. That's a win. This one, it breaks out above here. So 35. We're looking for the 45-minute mark. This one is still a loss. Moving forwards. We would have placed trades here now because given the 15-minute expires, you could enter these and you would win. Moving, and I'm pretty sure I'm done at this point. So then this one wins, and this is actually 4 p.m. mark now, and that's it. And I think that's it. That's all I wanted to do for this video, considering that big mess up. But anyways, we're done. So we're counting the wins now. 1, 2, 3, 4, 5. 5 out of 7. So that's pretty good. This trading session was pretty good, despite the mess up with my time zones. I thought, I don't know why I thought this was the afternoon, but it's actually 1 a.m. So really big mess up. Sorry for that again. So some final thoughts before we finish off. We're now finished with the first of the 3 price action techniques, support and resistance levels. So at this point, you guys know how to use support resistance levels, how to apply them. Once they break, what happens, how do you trade the breakout, how do you trade the bounces, how do you trade the ranging markets, etc. You can use support resistance levels for every scenario in price action. Basically, at this point, the topic of SR levels will not arise again until BO204. BO203 will focus solely on using trend lines in trending markets. And basically, I covered this in GT202 Part 2. Trend lines do not function well in ranging markets, which is why I don't bother with ranging markets. We're just going to solely focus on trending markets. Then BO204 will combine both the support resistance levels and trendline techniques in determining what the market type is. So that's it for this video. As usual, my recommended brokers are 24 Option, Bank to Binary, and Trade Rush. Make sure you guys use my links so that you can get an hour of tutoring with me. So I hope you guys enjoyed this video, and I will see you guys next time. P.S. Sorry again for the time